everybody, Jake here, TrendSpider, to go over another technical analysis video series, really focusing on technical analysis, but also focusing on trader psychology and trading psychology in general. And one of the main things that a lot of people struggle with is simply just knowing when to stay out of the market. It's very easy to sit in front of your computer and really just look at the chart and just get so bored that you just want to buy or sell something simply because you haven't pressed the buy or sell button in a couple hours. That is really not the way to trade. It's not sustainable. It's generally going to really put you in a hole if you're simply just buying and selling based on emotion. What you really need to do is find some type of approach, whether that's a moving average approach, whether that's a particular pattern approach. For example, in this case, we have the symmetrical triangle here on Facebook that we're going to go over. You really need to find something that you trade off of, whether, like I said, a moving average crossing to the upside, price breaking to the upside through a symmetrical triangle, or through the downside through a symmetrical triangle. So there's a lot of different ways you can do this. In this particular case, I'm going to focus on how you can use different types of alerts on the platform to do this. So a lot of people that I know that are very good traders, that are partners of TrendSpider, they do not trade unless price action breaks through a specific area or there's some type of condition that is met. So in this case, if someone was trading the symmetrical triangle, they likely would not be trading the symmetrical triangle within this range. What they'd be doing is they'd be watching price action around this area, waiting for the price to either break to the upside or break to the downside. And so the way that you can do this using TrendSpider and really take the emotion out of trading and really just stick to a plan is by using the alerts feature. So for example here, if we right click this bottom line, create alert at this line, and we do have something called sensitivity, which is something if let's say that you wanted to trade maybe just the bounces on support and then off of resistance, or you can use something called the breakthrough. And the breakthrough is something that's really nice, especially for breakout or breakdown traders, to allow them to really keep their head level and not trade when there's not a setup. So what we could do here is we could click breakthrough and we could choose a confirmation candle down to the 10-minute. And what that means is we're looking at the daily chart here within the symmetrical triangle. Price has been trading within it and coiling within it for quite some time now. But what we want to do is we want to focus on when price actually breaks down through the support line or breaks up through this resistance line. So the confirmation candle of the 10-minute means whenever the 10-minute candle closes and breaks down through this line, that's when we'll be alerted. So what we can do here is we can change this to support below. We can choose our expiration. You can choose how long you want this to stay relevant. Sometimes people, let's say, have a 2-week period where they say, all right, if price action has not done anything in 2 weeks, I'm going to reevaluate this chart. Or you can set it for as long as you want and really just set it until the price breaks through. Based on the symmetrical triangle here, the price is going to have to break through the apex to the upside or the downside within the next month and a half. As you can see here, the end of the apex here is around mid-January. So we could even put this for 60 days. So that's really 2 months out. And that would give us time and really give us the opportunity to see if price breaks to the upside or the downside without having to come back and look at this chart. Because at this point, as I mentioned, the price would break down or up through this apex here. So we have the confirmation candle in, we have the alert name in, we have this expiring in 60 days. We create the alert, we right click the upper part here, same thing. We don't really need sensitivity when using a breakthrough because the price actually just has to break through that particular line. So when we click breakthrough here, you'll see that the price action, same thing. If it breaks through this line and closes through that line based on the 10-minute chart, that's what the confirmation candle here is for. That's how you're able to really be alerted when the price breaks through immediately, not when the daily candle closes. So you can essentially swing trade the daily candle, but be alerted when the intraday price action is happening. We can name this same thing. Instead of support, resistance above. We can change the expiration to 60 days as well. So now, instead of looking at the chart every single day on Facebook and just wondering what's going to happen, you set these alerts on TrendSpider, and then whenever the price either breaks to the downside or the upside, you're alerted, and then you know it's time to take action. A lot of the time, trading in this choppy area just really chops people up. They trade emotionally, they get stopped out. As you can see here, what I've done is I've highlighted these areas with circles that the price action is respected, but there are times where the price would actually break down through these areas. So just when you get that alert, especially on the support line, you have to make sure that this is actually a true move. And I would actually probably be more concerned about the daily candle closing through this than the 10-minute, but you definitely want to get an idea when the 10-minute candle closes through it, so then you can reevaluate from there. So what we've done is we've highlighted these two areas on the symmetrical triangle, and then we just wait. We have this set for our email and our phone, so whenever the price breaks through to the upside or the downside, we'll get an alert through those two ways of communication. And then you don't have to stare at the chart all day, and on top of that, you can stick to a plan. And a lot of the time, people are neutral on these positions. They don't really care which way the price goes. It can go to the upside, it can go to the downside. What they're focused on is really price finding a direction and either breaking down or breaking up. So creating these alerts allows you to take emotion out of the trade and allows you to simply stick to your rules. And whenever the price breaks through and closes through this line, it's likely going to continue. Just like if the price breaks through and closes below this line, it's likely to continue from there, especially if you have a multi-day move down. So this really allows you to take the emotion out of trading, and you can do this with moving averages as well. You can go to create alert, you can go to multi-factor alert, and let's say that you're looking at a specific moving average cross. So let's say the daily indicator EMA 50 has to cross up through the daily EMA 200. So instead of having to wait and guess and say, oh, well, maybe I'm going to get in a little early, it looks like it's going to cross, you set these alerts, and this, as I mentioned, is the multi-factor alert. This is different from the dynamic alerts that we just went over, but it allows you to remove emotion, stick to a plan, stick to a particular condition that has to happen for you to make the trade, and you remove emotion. Emotions are easily the most detrimental thing to trading. The most successful traders I know have some type of strategy that they implement, and they do not deviate from that strategy. It's a set of rules. They don't let their emotions make the trade. They let their rules make the trades. And using these alerts on TrendSpider really allows you to take the emotion out of trading, stick to your rule, come up with a set of criteria that need to happen before you take the trade, and then you're trading on a lot more of a strategy-based approach rather than an emotional-based approach. Hopefully this video was helpful, and everybody have a great day.